Hello, everybody. Mike Molina here. Well, last week was a very exciting week. We had lots of great news. And as you probably heard, rates took a significant tumble, and we're going to look into why that has happened. So right here you see the weekly report from Freddie Mac for the national average of interest rates. As you can see, we closed out last Thursday, September 4th, at 6.5% for a 30-year fix. You see we've had a steady decline all the way back since the beginning of the year of January, and we have continued that trend with the exception of a few bumps, mostly having to do with tariffs, but the concerns with that have now pretty much passed. There's many reasons that the rates are starting to drop. We've continued to see inflation being very tame. The last inflation report, the personal consumption expenditures report, came in as expected, so no inflation concerns presently with the markets. Also, the ADP report came out on Thursday, and ADP projected there were going to be a little over 100,000 jobs added, and in fact, it came in much lower at only 54,000 jobs. Then the big talk of the town, so to speak, the government's BLS jobs reports that comes out every month. This has been what all the drama has been between the administration and others about firing the former head of the BLS. And the jobs numbers came in very low, much below expected. It was expected to come in at about 75,000, instead came in at 22,000. This is showing now an unemployment rate of 4.3%. That's significantly up, and that is going to put more pressure on the Fed to lower interest rates. This is why on Friday, when this BLS jobs report came out, we saw a tumbling of interest rate by nearly 0.25%. So that national average from Freddie Mac that we just saw a second ago of 6.5 is now down to 6.25. You can see that the probabilities chart continues to be very positive. Everyone is expecting a 0.25% drop in September. That meeting is coming up in less than 2 weeks. Then we have a meeting on October 29th and December 10th and January 28th. And there is expectation that there'll be a 0.25% reduction to the Fed funds rate at least 2 out of those upcoming 3 meetings. And just as a reminder of the impact that lower rates has on sales, when rates are high, sales are depressed, but when rates go low, sales increase. And this chart very, very clearly illustrates that. So the boom is on the horizon, and I hope that you're ready, because I sure am. Something else I want to talk about that has been a huge, huge win for years and years and years. Something called trigger leads has been just the bane of the mortgage industry, and I'm sure you've heard about it. When a client or prospect of yours applies for a mortgage loan to get pre-approved, all of a sudden they're bombarded with emails and texts and phone calls from lenders, some of them very unscrupulously pretending to be the lender that you referred them to perhaps. And this process has finally been put a stop to. On Friday, the president signed into law H.R. 2808, which is the House Act that amends the Fair Credit Act that prohibits that practice from taking forth. It will take effect in 6 months. So we've got 6 more months of that terrible practice happening, but it is going to end in 6 months, and it's just going to be a much better environment for people to borrow from. I'll read you a quick summary. It says, this bill limits the circumstances in which credit reporting agencies may provide consumer credit reports to third parties in connection with residential mortgage transactions. Specifically, the bill prohibits a credit reporting agency from providing a consumer's credit report to a third party in connection with a residential mortgage transaction unless the transaction consists of a firm offer of credit or insurance and the third party provides documentation certifying that it has the consumer's consent, or the third party has originated a mortgage on behalf of the consumer, is a current mortgage loan servicer to the consumer, or has a current specified banking relationship with the consumer. So that's a huge win for all of us. It'll make our clients in much better moods for sure. It'll keep those annoying texts and emails away, so spread that glorious news. Thank you so much for watching. If you have any questions, please don't hesitate to call me anytime. I'm always happy to help. And please, if you can, like the video, subscribe to the channel if you can, and share the video with clients, prospects, and friends. Thank you so much, and have a wonderful day. Take care.